What up, everyone? Welcome to my YouTube channel. This is Harvey from Black Forex Trader. So, in this video, I'll be doing an introduction to basic supply and demand. So, I'll be doing two patterns that represent supply and demand. So, before I get into that, I just want to thank everyone that liked my YouTube channel and those who watch my videos. So thank you guys very much, because you guys are the ones that makes me to make more videos in order for you to learn. So I'm not gonna make this video long, so without wasting any time, let's get moving. So as I say that I'm going to do two patterns that represent basic supply and demand. So I'm just gonna get on and draw them so and give you a little bit of scenario of what I'm talking about. So the first pattern is this one, which is called the drop, then base, then rally. Sorry, this one is the base, drop, base. Then let me end it here because I still have to explain. Then the next one that we have is the one which is called the rally, then base, then rally. So these are the two patterns that I'm going to be talking about in this video. So as you can see on the first one, the first scenario, we had the rejection at the high point. Then the market gave us what? A drop, a very beautiful drop. Then they started to consolidate. So once they start to consolidate, they are forming a base. Then they continue going down. So once you see them doing something like this from a peak formation high, this is a peak formation high here. Then you're gonna, sorry about that, then you're gonna mark the consolidation part, which is your base, like this, which is the what, which is also your supply zone here. Which is your supply zone, and this scenario is drop, base, drop pattern. Let me just write pattern at the end, which is something like this. So as you can see here, the market was going down, then eventually you see the market reversing, giving you a pullback. Then once you see the market doing something like this, you're gonna wait for the market to reach the supply zone. And once the market reaches the supply zone, this is where you're gonna look for sell opportunities. So you're gonna wait for them to give you either an M formation, head and shoulder, then they give you rejection candlesticks, which is pin bar in this instance, then a bearish engulfing candlestick. So as you can see in this scenario, let's say they reach this point, then they give you a pattern like this. Then that means they respected what? The supply level here. They gave you a pattern like an M formation, they gave you a pin bar, then the bearish engulfing candlestick, then meaning this is where you're gonna buy, so this is where you're gonna sell and then take them down. So same applies to this one here. You can see we have a peak formation low here. We have peak formation low. Then as you can see, we had a rally up. Then they give us what? A consolidation here, which is also what? The base. Then they continue rallying up. So you're gonna mark the base also in this instance like this. Then you're gonna wait for them to come and try to challenge this base here in this instance, which is what? The demand zone. Then this scenario is called rally, base, rally, like this. So let's assume also the market does what we expect the market to do, which is to come to this level, respect this level with a pattern, then they continue going up, meaning that once the market reaches the demand zone here, this is where you start to look for buy opportunities, start to look for patterns. Same thing that I explained here. In this instance, we're going to get a pin bar plus bullish engulfing candlestick. So without wasting any time, let's get to the real market and try to find these two patterns here. So let me just bring back the chart. Okay, let me zoom it out so that we can see the candlestick, because that's very important. So as you can see here, we had a downtrend here, right? Then we had a rejection movement here. Then they give us what? The first consolidation, which is these two morning stars which are here. Then they continue going up. Look, after this consolidation, look the movement after this consolidation. They gave us what? Three beautiful bullish candlestick, which means the rally. Then they start moving this shady movement here. So once you see this, then you're not going to trade around this point. Even this point, you're not going to trade because you're not sure that they're going to continue going up, because it's just a in one way move like this. So as you can see, they started to do what? To reject here. So once you see them going down, then you start to look for what? Your base. Remember, we had what? We had this consolidation point here. Then you're gonna mark it. You're gonna use the last low candlestick, which is this one. Then the close of the body, which is here. Okay, which is something like this. Then from there you go to smaller time frame. Let's go to 30 minutes in this one. Let me try to find. Let me just zoom it out to save time. Okay, here it is. So as you can see, when you get to smaller time frame, you're gonna adjust your lines to be clear. We say close of the body. Let's just put it here. Yeah, so this is our consolidation here. You can even use these pins here. You can even put the line here at the close of this morning stars like this. As you can see, after this consolidation, the movement out of this base here, the rally, it was beautiful because it was all bullish movement or bullish candlesticks. Then as you can see, the rejection here towards the demand zone. As you can see, they first try to touch the demand line here. As you can see, this, sorry, I forgot to write this one. This is our demand zone. This is our demand zone like this. As you can see, this is our first attempt here. Then they went up. Then here, this is where they reached our demand zone. So you can see they reached our demand zone with a strong bearish movement here. But once the bearish movement closed, the second candlestick was what? Bullish. Then after this, then if you're not sure that they respected what? Your demand zone, you're going to wait for the second bullish candlestick. In this case, as you can see, they give you what? A consolidation point here. Then meaning that you will buy after this close of this candlestick here. Meaning this is where you take what? Your entry. This is where your entry is. Then your stop loss is below the low, which is somewhere around here. Then your take profit point will be the previous high, which is this one, meaning it will be somewhere around this close of this candlestick here. Understand? So even if you look further on this same scenario here, let me, okay, if you look here after this demand zone here, you can see that the market did what? Rallied up. After this consolidation here, market rallied up, then they give us what? Another base here. Then they look at the movement out of the base here. It was very bullish. Then as you can see, the rejection point, remember in this instance you have what? Two bases, which is this one and this one. So we're gonna first draw this one, meaning that if they break this base, that's when we're gonna go to this one. So as you can see, we can draw this base here, which is also rally base rally, like this, which is rally base rally. Then they rejected here, then they rejected towards your base, your first attempt base, which is this one, which is also what? A demand zone here, which is what? A demand zone. Let me copy this one, which is also your demand zone here. Then you can see the movement out of demand zone was very weak, meaning that you would have bought around this point after this pin bar here. Then same entry point or take profit point will be, the first one will be this one here. So two candlesticks, then they hit a take profit point, then the stop loss will be on the lower line of the demand zone of the base, which is this one, meaning that the entry will be something like this, meaning that you will have what? Two trades from this, originally from this one here, which is something like this. Your stop loss will be like this, meaning that these are your trades once they respect what? Your demand zone, which we had two, which is the first one is this one, and this was the second one, which the pattern is this pattern, which is the rally base rally, then you retest to the base, then continue going up, which is something like this. You understand? So we are done with the rally base rally. Let's look at the example for drop base drop. Let's go to another pair. Let's try Euro USD. Okay, let's go to H1 time frame. Let me start from let me auto feed this so that I can see the candlesticks. Okay, I see an example here. As you can see, the market was what? An uptrend until they reach the peak formation high, which is this one. As you can see, they give us what? A very beautiful M formation. Then look at the movement out of what? Out of the pattern, which is what? The bearish engulfing candlestick. Then after this bearish candlestick, you can see that they give us what? The base, which is the consolidation. This is our base here. After this base, they did what? They dropped again. So once you see this kind of movement, then you're gonna do what? Cover the base. Sorry, like this. Gonna cover the base. Like this. So as you can see, they give us what? The base, sorry, the drop, base, drop. Then as you can see, the market was what? Approaching what? The base that they created, which is what? The supply zone, which is the supply zone here. So as you can see, once they reach the supply zone, they first touch the supply zone with this high here. As you can see, they give us a beautiful rejection bearish candlestick, but it wasn't enough. As you can see, they did what? They went again to challenge the base, as you can see, but they closed what? They closed below the base here. The base is this one. As you can see, they closed below the base. The next candlestick gives you what? The confirmation. Either they are going to continue going up, or they start to do what? To reject and go down. As you can see, they give you what? A beautiful M formation. Then they started to go down, meaning that your entry is somewhere around here after this bearish close here. Then your take profit point is the low. Then your stop loss is where on the line, the upper line of the base, which is here, or you can put it in the middle of the base, depend on your risk reward ratio. So this is this pattern, which is what? Something like this. The drop, then excuse my drawing, I'm just trying to do it fast. Which is something like this. So one thing that I can tell you is that at the top or the bottom, it won't always be what? It won't always be the M formation. Sometimes it will just be the one-way street. It will be just a rejection like this. They'll just reject like this, then they come down, they come again. Then they wouldn't always give you an M formation before they give you this pattern. So you must always be open-minded to any possibilities that you see in the market. So these are the two patterns that I wanted to talk about today. This is where the video ends. So if you are new to the channel, please subscribe and hit that bell icon so that you don't miss anything that I'm gonna post in the coming weeks, because this is the introduction or the first video that I posted on supply and demand, meaning that there are still a lot of videos that I'm gonna post explaining the depth of the supply and demand. So this was just an introduction, so there's still more videos coming. So thank you guys for watching.